The same logic applies for a downtrend as well. Okay, so if the market is moving in waves like this point becomes my high, this becomes my low. This new high that has been formed is lesser than the previous high, so this becomes my lower high. This new low in comparison to the previous low is lower, so this becomes my lower low. So if a market makes lower high, lower low formation continuously, that means the market is in a downtrend. Okay, so higher high, higher low means market is in an uptrend. Lower high, lower low means the market is in a downtrend. Okay, now let us plot these values and try and understand the direction of the market, right? So I've already done it here. So if you can see here, this is a higher high value, this is a higher low when compared to this low point. This new high is greater than the previous high, so this becomes my new higher high. Here this is slightly higher, so this becomes my higher low. Here this high is greater than this high, so this becomes my new higher high, and this my new higher low. So I clearly know that the market is in a structure where it is moving upwards. So I know that the market is making higher high, higher low structure, so the market is in an uptrend. Okay, now similarly, if you see here, the market made a higher low and then a high which was higher than the previous high. Then the market failed to make a higher high. So here the market just made a high which is lower to this high. So this became the new lower high. Okay. Then the market continued its downward rally by making a new low. And when you compare this new low to the previous low, this was lower. So this became the new lower low, right? Same with this high. So this high, when you compare it with the previous high, this is a lower. So this again became a lower high. So if you look at this, now I am clearly understanding the structure in which the market is moving. So if it is making higher highs and higher lows, it is moving in an uptrend. If it is making lower highs and lower lows, then the market is moving in a downtrend. Okay. The theory also says that there are three main phases of a market movement, right? So the first one is accumulation phase, meaning this is the phase where the public participation in a downward rally has resulted in a phase where the stock price is so cheap that smart money or big net worth individuals start accumulating the stocks at this point. Okay, and once the trend becomes clearer, the public starts moving in to the trend and start participating in this new trend, and this is called the second phase, which is the public participation phase. Okay, and at some point when the market is overbought, that means there is euphoria in buyers, the smart money or the high net worth individuals slowly start exiting their trades, and this is called the distribution phase, and this cycle keeps continuing, and you can see the same in these wave patterns. Okay, how does knowing this help, right? So if you have ever tried to swim against the current, you would have understand how difficult it is, right? Similarly, the same goes in trading as well. If you are against the major trend, if the major trend is a downtrend, and if you're on the opposite side trying to buy stocks, there is a high probability that you will make no money there, right? So that is why it is important for us to understand the type of trends that are currently operating in the market at both the macro level and the micro level, for us to align ourselves towards that particular direction. And once we align towards that direction, the current helps us swim faster, better, and the probability of a good outcome increases. That is the core reason why understanding this principle and applying it in real time helps a trader avoid potential losses. Now that we understand how the market moves, it is important for us to align ourselves with the macro trend, right? So for that, there has to be an objective way to do this so that there is no subjectivity involved at arriving on decisions. For that, I have created a trend confidence meter. We will try and understand how this works. All right. So for us to align first, we need to understand the trend that these markets are currently in. Okay. So if I'll have to look at the primary trend, as we all know, spans between months and years. If I just look, so here I am looking at the trend, and the trend is, it has made a higher high, a higher low, a lower high, and a higher low. Okay, so here I can see that the market is in an uptrend, but the only challenge here is that it made a lower high. But if I look at the other structure, I see that the market is still going higher. So I'm going to keep this trend as up. Okay, now looking at the week level, which is my secondary level, now I see that the market is making a higher low, higher high, and a higher low. So here the market is again telling me that it's in an uptrend. So I choose this as up. And now looking at the micro level trend or the tertiary trend, I go to the daily time frame, and here I see again the market is making a higher high, higher low. So all three trends are pointing towards a uptrend. So this trend confidence meter is telling me that basis the trend, right, there is a high confidence that the market is moving higher. So I need to align myself for direction that is on a higher end. Okay, in simple words, I have to align my trading decisions towards the macro trend, which is showing a bullish bias. So how does this trend confidence meter work? It's simple, right? So for every trend, there is a particular weight that has been assigned, and the weights are given in a hierarchical way where the primary trend gets the highest weightage. So here, if we see, if I choose monthly as up, this has a weight of 50. If the monthly is a downtrend, then that becomes a negative 50. So the overall confidence becomes neutral here. Okay. Likewise, if the trend of the tertiary is down, then this becomes bearish signal, right? So this way I can objectively arrive at a decision so that I can always align myself to the macro trend so that I don't swim against the current. So that is the whole understanding of this. I will also ensure that I put this in the description for all of you to use going forward. So if you have liked this video and you believe that this content has given you some value, then please subscribe to the channel, hit that like button, and share it with your friends so that they also get this much needed knowledge before they start trading in the market. Thank you once again for watching this video. Bye bye.